What's up, everyone? It's Caddy with Money Investing. Welcome on board for yet another Market Open live stream. And we are red. We are down. Amazon crashing, Apple's crashing, the NASDAQ is dropping as well. So we can finally do some buying here. NASDAQ down about 86 basis points. We got the S&P down about 61 basis points. We got the Dow Jones pulling back over 25 basis points as well. I'll break down a lot of different stocks. There's a lot that we have to go over. So we'll do that. Just give me a thumbs up if you guys can see me and hear me without any issues and if everything is working good. And we should be all set. So, all right, let's take a quick look on the earnings for Amazon. So, what? So we got earnings, $6.12 down from $9 a share same time last year. We got the revenue just coming in shy of about $111 billion. EPS, I already knew that was going to be much lower because of the COVID-related costs. The company is spending a ton of money on employees. You know, last month they announced they're going to be hiring about 275,000 new employees. That's a big expense for any company. But revenue, in my opinion, is kind of in line pretty much at about $111 billion, give or take, because the company is just so large that they're only missing it by less than $1 billion in revenue, right? So revenue, very, very strong in my opinion. And Amazon reckoning with a decelerating sales growth as consumers go back to physical stores and the company faces supply chain challenges. Revenue in the third quarter rose 15%, down from 37% growth in the same time last year for the company, because that was the lapse of COVID related and of course work from home and pandemic spending on online e-commerce as well. See, Caddy always more happy when the markets are down and they're up. Man, you tell me. When markets are up, I'm just like so disappointed. I'm like very, very hard to deal with when the markets are high up, but today I'm excited. So for the fourth quarter, Amazon forecasts sales between $130 to $140 billion, representing growth about 4 to 12%. And analysts surveyed by FactSet were expecting revenue to be about 13.2% higher to $142.1 billion. Again, very, very large corporation, right? This is not a small company. We're talking about hundreds of billions of dollars in one quarter, right? Most companies don't even do this much in a year, and Amazon is doing that in one quarter. That's absolutely phenomenal. Amazon CEO Andy Jassy said the company expects to take on several $1 billion of extra costs in its consumer business in the fourth quarter as a result of labor shortages, higher employee costs, global supply chain constraints, increased freight and shipping costs. So every possible problem you can think of out there that's kind of lingering on, whether it's the shortages of employees, shortage of workers, raising costs related to freight, logistics, rising inflation, we got supply chain problems, everything Amazon has to deal with because of such a large business. It's got so many different moving parts here. That's why Amazon is navigating these challenges as it enters peak holiday season. And on a call with reporters, CFO Brian said that Amazon expects to take $4 billion in costs related to labor and inflation, as well as productivity headwinds in the warehouse for the company as well. So, Amazon said its operating profit in the fourth quarter will be in the range of $0 to $3 billion. That's a significant step down from its operating profit, $6.9 billion, same time last year. Sales in the online stores rose 3% year over year to $49.9 billion, but their physical store business, right, grew 13% to $4.27 billion. So that just goes to show how people are moving away from online more towards retail sales and more physical foot traffic for the company as well. All right, revenue from the third-party sellers, which includes commissions on the marketplaces as well as fulfillment shipping fees, climbed 18% to $24.25 billion, a slowdown from 34% growth in the second quarter and 60% in the first. I just really like the fact that they just put it in a way that it's decelerating business, even though it's still growing at billions of dollars and it's still double-digit growth. Right, for the fact that the company is doing $111 billion and they're still able to grow double digits year over year, just goes to show how big the business is. And it's law of large numbers, right? The bigger the numbers get, the harder it becomes to grow those numbers, right? And for the first time in its history, revenue for Amazon services surpassed its retail sales. If you guys remember my bullish thesis on Amazon, what was the one thing that we talked about when I was projecting revenues of $1 trillion by 2026 for Amazon? My biggest thing was Amazon services. In my opinion, that's really going to take over or surpass Amazon's retail business, the product business eventually. That's where the profitability is. That's where the margins are. and that's what my bet is on. It's Amazon services, and more specifically Amazon Web Services as well. It's the retail business, the Prime membership, all that is great, but it's just a way for people to get on the door, get on the front door with the ecosystem that Amazon is building. And you'll notice that net product sales are 54.9 billion, while revenue from Amazon Web Services, advertising business, third-party seller services, and Prime subscriptions added up to $55.9 billion, so about $1 billion higher than the actual product sales. So that was interesting. And Amazon Web Services topped estimates with revenue jumping 39% to $16 billion, while analysts expected sales of $15.48 billion, and AWS generated $4.88 billion in operating income in the period, while operating profit at the parent company was just about $880 million. So $4.88 billion, so give or take $5 billion off of $16 billion. That's over 30% operating profit margin for the company, which is again very, very strong because gross margins are much higher for the company. All right, let's take a look at Apple now. So Apple also struggling here. EPS was $1.25, kind of in line with the consensus estimate. Revenue was $83.36 billion, up 29% year over year, but just coming in shy from the consensus estimates. iPhone revenue was $38.87 billion, just shy of $41.51 billion. That was the consensus estimate. This right here was a big miss. In my opinion, this iPhone revenue, about a $3 billion miss from the consensus analyst expectations. That was actually a big number drop in the iPhone revenues, but still, I mean, take a look at this, 47% year-over-year growth for the company. Services, we got $18.28 billion, a little bit higher than the consensus estimates, up 25.6%. Other product revenues, just a little bit shy of the estimates, still up over 11.5%. Mac revenues were a little bit slower, 1.6% year-over-year growth, but this does not include the new MacBook Pros that were released in October. So of course, we didn't have time to sell those, so a little bit shy there at just over 9.1 billion, and iPad revenues at 8.25 billion, a little bit higher, strong growth, 21.4%, and gross margins also expanded. One of the things that I was talking about with Apple revenues, in one of our members here earlier, was that if you were to just remove the consensus estimates, right? Let's just quickly take a look at if you can do this. I'm just gonna remove the consensus estimates. Right? Just don't look at the estimates. Just look at the revenue itself. 83.3 billion, 29% growth. 38.87 billion, 47% growth. 18.28 billion, 25% growth. I mean, the whole point is that the company grew in all specific segments of the business. And it was very, very strong across the board. But then when you tag along this consensus estimate, it feels like the company somehow reported very poor numbers. Right? It's very psychological, but if you just look at the numbers that reported and the year-over-year growth, it's strong. It remains strong. iPhone sales were up 47% year-over-year, but still, again, they put this word, but still came in under Wall Street consensus estimate. So Apple hasn't provided an official guidance since the start of the pandemic, but Cook said Apple expects solid year-over-year revenue growth in December quarter, despite the fact that Cook said Apple will face supply chain constraints. And this right here, this is interesting. Still, Apple says that its December quarter will be the company's largest in terms of revenue in its history. That's a very bold statement. And this is despite the 10 million unit cut that they're forecasting because of supply chain issues, and the $6 billion hit to the revenue in the September quarter that they also faced earlier. So very, very interesting guidance here. The expectation for year-over-year sales growth suggests that Apple sees significantly more demand for its new iPhone 13 models than it can supply. And we got Apple is currently in the middle of a massive growth on sales of iPhones, iPads, Macs are exploded during the pandemic, and Apple's annual revenue for its fiscal year 2021 up 33% from 2020 to $366 billion, right? I mean, 366 billion, guys. That's a lot of money that they're pulling in every single year. That's up 33%. And yet the stock is down 4%. The strongest growth in Apple product categories aside from iPhones was in its service business, which includes sales from App Store, music, video subscription services, advertising, extended warranties, and licensing. This, of course, Apple is going to be contending against Epic Games as well, because there's going to be some tweaks that they are going to soon be making if, of course, Epic has continued to won that battle, even though Apple was not considered as a monopoly and they won on most counts. But that one little tweak about sourcing payment methods and kind of forcing members or people to really leave the App Store to kind of pay the members itself is going to be very interesting. So whatever, thank you so much for the donation. A really good channel. Keep up the good job. Thank you so much for that. I really appreciate it, and I'm more than happy to go over any stock that you like. And yes, the VIX is going higher. Can you talk about the VIX being up? Yes, we'll go over that shortly. But Cook said that Apple has 745 million paid subscriptions, which not only includes first-party services like Apple Music, but also subscriptions through Apple's App Store as well. And that's up 160 million year on year, which is 5 times in 5 years for the company as well. So let's just quickly run through this presentation so that we can jump over to the chart. Facebook changes company name to Meta. That was very interesting. That's short of Metaverse, and set to change ticker symbol on December 1st, which is going to change to MVRS. So big company change coming in for Facebook. And Chevron also gained 2.1% in the pre-market after posting its highest quarterly profit in 8 years. That is absolutely incredible. And of course, that's strictly based off of energy prices moving higher. We talked about crude. We've talked about Brent, hitting highs of $85, $86 per barrel. We got Chevron earned an adjusted $2.96 per share for the third quarter, beating estimates at $2.21, and with revenue also beating Wall Street consensus forecast. Exxon exceeded estimates by 2 cents with adjusted quarterly earnings about $1.58. The revenue came in below analyst forecasts. Exxon was held by strong demand and higher prices, among other factors, and profit was its highest in 4 years, and Exxon added 1.5% in pre-market trading as well. So Starbucks beat estimates by a penny with an adjusted quarterly profit about $1 per share, but coffee chain's revenue and global comparable sales fell short of Wall Street forecasts. Starbucks saw particularly negative impact on its results from resurgence of the pandemic in the key market China, and Starbucks also slumped 5.2%, which we'll go over shortly here in the trading view charts. And we got U.S. steel, ticker symbol X, surged over 9.2%. There's been a shortage of steel to begin with, and then they also reported some very, very strong numbers with quarterly profit coming in at $5.36 compared with $4.85 consensus estimates. That's a strong beat. Revenue also coming in above analyst projections as steel shipments surged, while U.S. Steel also raised its quarterly dividend to 5 cents per share from 1 cent and announced a $300 million stock buyback. So pretty much everything that Wall Street looks for: share buyback, hiking their dividend, top line revenue beat, bottom line EPS beat, and we got stock up over 9%. All right, quick upgrades, downgrades. Seifel downgrades Starbucks to hold from buy. JP Morgan reiterates Apple as overweight. We got UBS upgrading Caterpillar to buy from neutral. We got Goldman Sachs reiterating Amazon as a buy as well. Morgan Stanley downgrades Altria to equal weight from overweight. We'll talk about this stock shortly. It's got a great dividend yield at over 8.1%. But really interested to find out why it's equal weighted. Bank of America reiterates Facebook as a buy. And we got Eurozone inflation hitting a 13-year high at over 4.1%, and Eurozone inflation hit a 13-year high in October as the currency bloc battles surging energy costs. Headline inflation on Friday came in at 4.1% for this month, according to preliminary data from Europe Statistics Office Eurostat. And then this was the highest level seen since July 2008. So that's that. Let's take a quick check on the markets. We got the NASDAQ down still over 80 basis points. We got the SPY down about 50 basis points. We got the Dow Jones down about 20 basis points. Apple is back down to 147.66, down about 3.2%. Amazon also breaking down here, although getting a little bit of bought up here, down about 4% still, down to 33.12. This right here is going to be that support level. We'll see whether we open higher or lower than that level. Starbucks is also down about 5.7%, unfortunately breaking down from this descending triangle. So a couple times you'll notice that we have formed this descending triangle. In the first time we actually broke out. This right here was the second time, and then finally we're gapping down. That 300 simple moving average is going to be that level to watch, roughly at that $105, $106 per share, around those levels. Let's take a look at ExxonMobil. So XOM, we are up over 1.3%. Resistance next is going to stay put at $66.50. So that right there is going to be that level to watch very closely. Talking about Chevron, we are up over 1.4% also. So this right here is going to turn into a new support for the company, sitting roughly at 113. So let's just pull back and where we're coming from. So this right here was a lot of consolidation back in 2018 all the way till 2020. A lot of lower highs being formed for Chevron before finally getting that huge breakdown because of the pandemic, and now it's finally starting to recover very nicely. So there's going to be some resistance level to watch all the way as 122, even as low as 120 levels. So we'll keep that intact right there at close to $120 per share for Chevron. All right, so let's see. First 4 hours rally to intraday crash. Let's take a look at the VIX. We got a VIX up over 7.3%, right? So we were talking about this over the weekend and going into this week as well. If the VIX spikes, that's going to result in the S&P, the Nasdaq to also come down, right? So what do we say here on this channel? If you guys remember it, we talk about when the VIX is high, it's time to buy, and when the VIX is low, it's time to go, right? So it was much lower, hitting support at close to 14, 15 levels. So right here, and right now we're on our way back up. So, we're pushed up a little bit over 19, 20%. I'm watching 20 levels next for the volatility index right here. And, we're going to position ourselves as a buyer if the VIX continues to spike here. All right, so let's see. Virgin Galactic, has it reached the bottom yet? So SPCE. Let's take a look. So this stock has just been so volatile. I don't think I've ever seen anything this volatile. And a stock that has such a high variance that goes from $17 to like $60 and then back down to $17 and then back up to $60 and then back down. Like that's happened twice with this stock. So $17, this right here is going to be that next support level to watch for SPC, for Virgin Galactic, right? So this right here, keep a close eye for the company, and that could represent a good swing trading opportunity. Fundamentally, I'm not really interested in Virgin Galactic, but as a swing trade, it could definitely suggest some potential move back up once we hit that support at $17. The RSI's come down, the MACD's come down, and it's almost an identical pattern. Like you'll notice twice, it's followed that same exact pattern. We rallied, come back down, rallied, come back down, and on a weekly chart, we're hitting that 200 SMA. So, that would be the level to watch at close to $17. Resistance stays put at 23 bucks. All right, so what do you think about UiPath? I did a complete video on UiPath. Make sure to check that out. In fact, actually today we did hit a high of, a couple days ago, we hit a high of $55. Wow, I didn't know that. So we did see a spike of 7%. After hitting highs of $55, we quickly reverted back down. So $47.28, $48 is going to be that support level to watch. And right now, like I said, there needs to be some bullish divergence that needs to be formed before we see a potential breakout back up to $60, $65 per share. ARK Invest, Cathie Wood, they do own, roughly over 12 million was the number, roughly about $1 billion worth of this stock. But I've done a complete fundamental analysis on this company as well. I do like the whole idea of robotics. And processing automation, so on and so forth, kind of handling most of the mundane sort of like repetitive tasks over to robots, but the fundamentals need to line up, right? The company needs to generate a lot of cash flow, not a lot of EBITDA, a lot of revenue in order for me to be very interested as a long-term play in this stock. So $47 is going to be that next support level, and resistance is going to stay put at close to $55. ARKW bought Facebook yesterday, so that's good. That's great. Yes, Facebook, in my opinion, remains very undervalued. I added Facebook this morning as well. I will continue to dollar cost average, continue to kind of nibble in here and there because it really is trading at a very, very cheap price here relative to where it could be in the future. Like based on my target, 2026, I'm looking at a good 110, 120% upside for the company, and of course, annualized, that's going to be north of 15%. So let's see, so right around that 128% mark is what we're looking for, a potential upside, but that's also 5 to 6 years out for the company. Caddy, how do you look in the metaverse? I don't know. I've never virtual caddy. I've never looked at it. Apple buy on the dip. In my opinion, 145, 146 won't be the worst price to actually start a position here. If you've ever wanted to own Apple, just given the growth for the company, 33% growth year over year is very strong. $386 billion. Next year, they could very well cross $500 billion in revenue, right? Apple has the potential to do that, in my opinion, iPhone 13 launch is going to be great. We've got the new, and the whole problem with Apple right now is the demand outstripping the supply. It's the same issue that AMD had beginning of this year, end of last year. Both AMD and Nvidia kind of had the same problem where the demand completely outstrips the supply, right? When their products are so good, there's so much demand that the companies can't make it fast enough, right? There's supply chain issues. They're dealing with so many issues. That's not a problem to have, but it's always a great problem to have, right? Companies, we don't want them to have problems to begin with, but in a nutshell, that's a great problem to have if if you're running a business and you just have so many customers that are just buying your products and you can't make them fast enough. So for me, Apple is going to be a buy at close to 145. If it does come down to 200 SMA at close to 136, I would gladly add more shares for that company as well. So those are going to be two sort of support levels to watch. 145, not as aggressive as 135. Again, this is going to be my sweet spot at the 200 SMA. I would gladly add more shares, but I don't think it's going to come down to that level. All right, so we got about a minute left. Let's just quickly switch over to our actual indices here. So we got the Dow Jones, we got the S&P, and the NASDAQ index. And then we'll quickly break down some individual companies as well. Yes, PayPal, I love PayPal at 225. If it does come down to those levels, I would gladly pick up a lot more shares. And again, be more aggressive when stock prices are down, right? That's the whole game, is when the stock prices come down, when the markets come down, the risk comes down with it. When the markets are all-time highs, the stocks are all-time highs, the risk is higher. So again, we always have to look at it from a risk perspective. The main objective first is capital preservation, and then we look at growing the count and growing the capital as well, right? So we always look at it from a risk management standpoint. Visa has had a brutal couple days here, so definitely been selling off quite a bit, the last couple days. So the markets are open. We'll go over that in just a second. But Visa, I'm watching $205. That right there is going to be that next support level to watch for Visa. Twilio is getting a little bit of a bounce back higher from the sell-off that we saw yesterday. And then let's just quickly go over to our individual stocks. We'll put Apple here, Tesla doing its own thing up to 1,080. Apple getting a little bit of bought back here. Let's put Amazon there, and we'll put Facebook over here. So Facebook just up over 90 basis points. Amazon still down over 4.3%, 4.4%, just under 3,300. And Apple, we'll see if the buyers step in for Apple at those levels. Tesla, today might be the red day. Today might be a red day for Tesla here. So given that the VIX has the potential to pop here, wouldn't it be good to wait to buy more? Yeah, that's true. So VIX just gives us a good general idea of the overall market, right? So it doesn't give us the idea for individual stocks, right? So of course, the volatility on the S&P 500, if this thing goes up, we can get a good estimate of where the S&P 500 is going to be. But when it comes to individual companies, if some companies are very, very undervalued, for example, Facebook, then I don't mind dollar cost averaging even at these levels, just considering the VIX is around here. So if it does go higher, and if Facebook drops with the S&P 500, that's even better. But just given where we are with individual companies, on a case-by-case basis, being undervalued, still having strong growth, and of course having that AR/VR growth story in front of us, I still like Facebook at these levels. But yes, you're right. Talking about the S&P as a whole and talking about the VIX, there's a good relationship between the two, and we can kind of hold off in buying if you do expect a bigger spike in the volatility in the future. So if you could pick one, Visa or PayPal or Visa, ooh, that's a great question. They both, I feel like, trade at, where did we open? Oh, we opened all the way down here. So they both actually trade at a rich valuation, in my opinion, both PayPal and Visa. It's a tough question. I feel like I would have to go for both. I can't pick one or the other between PayPal or Visa, because I feel like they both have a lot of growth potential in the fintech space. PayPal more so because they just continue to do a lot of acquisitions. Both Visa and PayPal do a lot of acquisitions to kind of keep their moat. But Visa's got much higher margins. PayPal's got a lot more users. So I don't know. It has to be both. It has to be both for me. Let's take a look at Enphase. So Enphase hit a new all-time high. We are at 230.74, up another 2% for this stock. This company will just not stop. It's been a great company. We've been talking about it for quite some time, and definitely breaking out to all-time highs here. Let's take a quick look on the markets. Starting with green today. So we got Enphase at the top of the list here, up over 2.4%. Caterpillar pushing higher, up over 2%. Breaking out to over $203 a share. So we'll go ahead and turn this level back into a support for the company. And let's take a look. So Unity Software back over 151. So this right here is the whole uptrending channel that it continues to trade in. So 136 support, 135 support. And we're just consistently making these higher highs and higher lows for the company as well. And just on a nice uptrend for Unity Software. Upstart up another 2%, getting a little bit of a bounce back higher from the sell-off that we saw earlier this week at 310, 311. Facebook is up 1.6%. We got Nvidia hitting new all-time highs again at 253.88. This stock just does not stop. Absolutely incredible move to the upside. So there's going to be a few companies that do report in November. By the way, calendar updates are active now for all of our Discord members. So if you go there, so far I've only been able to integrate like all the economic data. So inflation, Fed meetings, any economic releases, you'll find that in the calendar updates channel. And you can click on that link and that'll take you to the source where that numbers are going to be reported. But this weekend I'm going to be adding all the earnings as well and where to watch them with the webcast. So it's going to give you a reminder 30 minutes prior to when the event is starting. And of course, when the event is created, it'll give you a reminder as well. So make sure that you are watching that channel as well. And of course, we've also got the news channel and trading view alerts as well as part of our Discord. So I'll be adding some Nvidia reports, Square reports, Palantir reports in November. So those are going to be some, and I think Square also, yeah. So Square, Nvidia, Palantir, and Fiverr. Those are 4 companies, kind of like the big names that do report in November, along with a lot of other companies as well. All right, so Nvidia we covered. Let's take a look at PayPal. So PayPal getting a little bit of a bounce back higher, up over 0.5%, not a whole lot. Palantir just testing resistance, 25.75. We're right there. We're right there at that resistance here. Twilio getting a bit of a bounce back higher after the huge gap down. So I want to take a look at the 5-minute chart. Did we really? So we did push higher yesterday to fill some of that gap. That's interesting. So I'm actually going to move this up a little bit higher right there because we did move higher yesterday to fill a little bit of the gap for Twilio. But still, like a lot of indecision for the company, right? Just a lot of indecision. Massive doji candle here. You know, buyers, sellers, there's like a complete battle going on for that stock. We did push higher, then the sellers came in, pushed back down. A lot of volume in yesterday as well. So where did we trade? So 21 million shares traded, which was substantially higher than their 3 million, right? So we're talking 7 times higher the average 10-day volume. Twilio's got strong revenue growth, not taking away from the fact that the company is growing very rapidly, but it just, trades at a rich valuation. So, it's not going to be for me until after the fundamentals improve substantially for the company or the valuation comes down to more of a reasonable level as well. So let's take a look at Vertex. Disappointing again? Probably is. So down about 24 basis points here, just over 181, not really doing anything. 176, 177 remains at support. 186, we are just struggling to break out over that 50 EMA. So we got rejected at that level once again, once we tested that coming in from October 19th and 20th. All right, so Vertex we went over, Twilio we went over, PayPal we went over. Let's take a quick look on the markets. We got the Dow Jones getting bought up here, now green, up over 19 basis points. S&P still down about 40, but still getting bought up here. And we got the NASDAQ still down about 73 basis points. Let's take a quick look on the Dow 30 stocks. So Apple is the only one that's down 3.7% on earnings, but everything else is either flat or very green. The Dow pushing higher is probably because of energy stocks. We got Chevron, Exxon pushing higher. Caterpillar's up. Microsoft just does not stop. My God. Microsoft at 327. Did Microsoft just surpass Apple? So $2.449 trillion, and Apple is at 2.43. There we go. Microsoft is now the most valuable company, publicly traded company in the United States and probably in the world as well. So market cap for Microsoft now trading at well over 2.449, almost at 2.45 trillion dollars after the rally that we've seen from lows of $300, actually $280 all the way to new all-time highs at 327. So congratulations to all Microsoft holders out there. It's a very boring beast stock, I like to call it, because it's just been consistently charging through, up over 47% year to date. Just absolutely incredible momentum. And Apple slacking, kind of giving up that spot to Microsoft. But Amazon pulling back also, down about 4.3%. One thing that I do want to highlight for Amazon is that if you come over to the weekly chart, right, you'll notice that we're just sitting above that 50 EMA. So this right here was a very similar pattern for Amazon. I know there's a lot of people that have bought the stock, back in August last year, like even further back, and the stock has not really done anything, right? So you'll notice this entire sideways consolidation for Amazon. So let me just break that down here so I can draw on that chart. So this right here is just a lot of consolidation since like June, July of 2020 till now. So we haven't really done anything. We've just traded in this box, right? So that's been like the whole pattern for Amazon in over a year. But you'll notice a very similar pattern, right? This right here was the pandemic, actually not the pandemic, this was the US-China trade war back in 2018, but we traded in a very similar fashion here, just inside this box. And since September 2018 till March 2020, 2 years, stock didn't do anything, almost 2 years, until finally breaking out from these levels and jumping over 120%. So now the valuation got a little bit out of hand, and now the fundamentals need to improve. And right now we're just seeing a lot of consolidation. Could be seen as a massive bull flag to begin with, because this right here is a lot of consolidation here, and we're seeing a prior run up that could lead to another breakout to the upside. And of course their price targets are, oh my god, in mode is at $92 a share. That is absolutely incredible. But the point is that Amazon does trade in this range for a while until finally it gets that breakout that everyone is anticipating for the stock. Let's take a look at in mode. Up 2.7% to $91. So in mode also had a bull flag. So we talked about this in our Discord, and this right here was kind of like that consolidation pattern, and we're now starting to see that breakout for in mode as well. So I mean, absolutely beast of a company. This, we did a complete fundamental analysis. Jason says Amazon $4,000 by Friday. What Friday? Today is Friday. What, today by the end of the close? But this right here, in mode, my god, this company, I want to buy it, but this is just too rich, and it just keeps pulling away. So they reported earnings, strong numbers. We got $94 million, up 5.3%. That was much higher than the consensus estimates. EPS also coming in at 26 cents, 10% higher. Reported was 55 cents. Estimate was 50 cents, 10% higher than the actual expectations. This stock just keeps plugging away. That'll be a 4K Friday. Facebook keeps going up, so we are up almost 2%, so that's good. We're getting a nice bounce back higher. Let's take a look at DraftKings. Just consolidating sideways, not really doing much. We're seeing, this right here support at 44.60, 44.50 levels, and a lot of consolidation for DraftKings right now. Resistance is going to stay put at close to $55 per share. So that right there is going to be the level. It does represent some swing trading opportunities in the future, but if it does come down to 44, roughly $44 per share, so anywhere between that support level, I'd be very, very interested for a potential swing trade in DraftKings once again. All right, let's take a look at Starbucks. Wow, Starbucks continues to sell off here, breaking down below that 300 SMA. I've done a complete fundamental analysis on Starbucks as well, so make sure that you guys check that out, that video. And in a nutshell, I mean, we did what we concluded was it's got a great business. It's been paying out a decent dividend, but the growth in terms of a market-beating return, that wasn't quite there for Starbucks over a 5-year time horizon. Now, if the valuation comes down, that could change. So I'm going to be doing a revised estimate on Starbucks as well. But next support level to keep in mind is going to be sitting roughly at $99 to $100 a share, kind of aligned with this previous support level. But make sure that you guys do check out that entire playlist where we go over individual dedicated stocks as well. Amazon seeing some buyers here, so there is hope. There's hope for Amazon. Facebook charging through. Let's take a look at Apple here. And Tesla just about flat on the day, and Apple unfortunately pulling back once again. VIX coming down. Interesting, as the markets have rallied here. Look at that. Look at the intraday momentum here. So Mark, you aren't buying any of these dips, caddies. So Facebook I bought. Amazon I may buy later today. Google is at all-time highs. PayPal, my price target is at $225 for me to get in. Visa, I'll be more interested at $205 to add more. But other than that, Enphase all-time highs. Etsy almost at all-time highs. Tesla all-time highs. So, and Vertex I've already been buying. So I mean, there's not a lot of stocks to look into. Let's see. So Square Neo's down about 1.7%, just holding about $40. So that's good. Shopify is a little bit rich in terms of valuations, but we'll keep a close eye. What about Starbucks? Starbucks, not quite yet. I did a fundamental analysis on this company. So again, what we really concluded was for a 5-year time horizon, we don't quite get a market beating return, but that was also roughly, I believe, when Starbucks was at $115, $116 a share. So I'll have to do a revised analysis on the company because the valuation definitely has come down. So we're trading at under 48 times earnings, which is still high, still rich for the company. Trading at under 5 times sales here and 18 times cash flow, which is good. And 23 times EBITDA is also reasonable. But only the price to earnings is a little bit high for the company. So we'll do some more analysis on this company to see if there's any opportunities to buy Starbucks, because I do like the business. I do like the whole brand itself. But we also need to look at it from a fundamental and quantitative analysis standpoint as well. What do you think about Kathy loading up on Twitter? So Twitter has got very ambitious plans, right? So they had their investor day earlier this year, I believe, and they put forth, doubling of their revenues by 2025, I believe. So that was from a target of, $3.7 billion to north of $7 billion is their target by 2025. So very, very ambitious targets. And of course, they recently rolled out like super followers, and of course you can pay and follow someone for exclusive content as well. So they're definitely moving more towards monetization. So that's all good, but the company still trades at a rich valuation. So, we're trading at 118 times earnings, 32 times cash flow, 41 times enterprise value. Most of the times, valuation is going to be always important, and it all comes down to what you're willing to pay for a stock, right? If you're comfortable paying 100 times forward earnings for a company, that's completely fine, but it's a decision that you need to make. If you're not comfortable, if you think it's a little bit too risky, then that's also fine. You can look for other opportunities in the markets. So valuation always is going to be subjective, right? What other people may seem as undervalued, you may find it overvalued, you might find it fairly valued, right? That's why Upstart, there's still people buying, right? In the markets right now, it's up over 1.4%. That means there's still people buying at 334, even though the company trades at significantly overvalued levels, according to my opinion, right, according to my analysis. So, and that's what makes the market. So I do think that Kathy Wood in the short term could be wrong on Twitter, but over the long term, if Twitter is able to execute on their plans, on their ambitious plans, then yeah, I mean, it could pay off very, very nicely, but there is going to be risk involved in the short term for the company. All right, let's take a look at Robinhood. So where are we on Hood today? Down about 25 basis points here, so pretty much flat. So selling pressure seems to be getting exhausted now. So $33 is going to be that next support level to watch for the company. And there's no intention for me to actually own Robinhood, but support level is going to stay put at 33, resistance at close to $40 per share. Upwork coming down even more. So we're seeing that continuation. We're starting to break down below that 200 SMA. Near-term support, I guess, keep a close eye at this level. So, $43, $44, previous support, previous resistance. So that level has acted as some demand in the past for Upwork. But of course, we're seeing a nice breakdown for RSI, MACD also coming down below that signal line. So keep a close eye at that 43.65 level first, all the way as low as $35 per share for the company. Let's take a look at Southwest. So Southwest just hovering over that support here at 47.40. So right on the dot at $47 is the low for the day. So this right here, once again, is going to be that support level. Very, very oversold. And it's very interesting how Southwest received a couple upgrades, north of $65, $70 a share. And then when they canceled their flights, had that weekend of a lot of chaos. I can only imagine what that looked like at the airports, where people were just, getting canceled out of their flights. Of course, that's not a great look for the company, and it got downgrades, and then since then we've just been consistently selling off. That doesn't change the fact that Southwest reported great numbers, great earnings, and the balance sheet remains very, very strong. So as a recovery play, still bullish on the company. It's going to take some time for us to really find that momentum once again because of that recent cancellation. Of course, the sentiment is also down on Southwest right now. Tesla got an alert. We are up to 1,090. Does this stock ever stop? Does Nvidia, Tesla, like, do these companies ever take a breather? Ever? Do they ever come down? Give us the opportunity to add more. Dollar cost average, maybe? No? Nothing? Take a look at the RSI, 91.5. Can't even remember the last time I saw like a relative strength index for like a blue chip company, like a large cap stock that was over 91. Like 92. Really, I mean, this is just, we almost may hit a new all-time high again. 1,094, $1.085 trillion is the market cap, and 1,094 is the all-time high for the stock. Facebook is having a nice move, right? 2.7% in the green. Want to buy some more Facebook. Definitely want to buy some more Facebook. Might buy some more Facebook. Might buy some more Metaverse. Meta is what I want to really buy later today after the markets close. Or actually, no, after I get off the live stream is what I'm going to buy. All right, crypto, we're back over $61,000 here. Resistance stays put at 67,000. Ethereum, Ethereum just over 4,300. So hitting that resistance at close to 4,370 levels. So right there. Yeah, so they are going to be changing their ticker symbol to MVRS on December 1st is when they do that. Let's take a look at our select sector indices. Right, so we got our S&P 500 select sector index. So this one, you know, just to see, energy is probably leading the most, without a doubt, hands down. Energy, actually no, energy is not. It's been down. So utilities is leading. Utilities is up over 66 basis points. And we got staples, we got materials, discretionaries is up. Energy is up over 22 basis points, but we got technology, financials, and healthcare struggling the most. Let's take a look at since the open. What's happened since the open right there? So since the markets have opened, energy is kind of stalled, down about 5 basis points. Materials, for some reason, has really rallied, and so is discretionary. Discretionary does include Tesla, so that makes sense. And we got staples, utilities also pushing higher with Bitcoin just flat, industrial flat, financials flat, healthcare flat, technology down. All right, let's take a look at Coinbase. So Coinbase just consolidating sideways, down about 63 basis points. Mara is slightly up, also consolidating. Almost an identical pattern for both Coinbase and Mara. You'll notice it's just been trading sideways here for the most part. So $303 support, resistance, and target next is sitting roughly at $345 for the company. And Coinbase is not overvalued. In my opinion, trades at a very reasonable valuation. The last time we checked for Coinbase. And Mara, resistance next is going to be $58. So that right there is going to be the target for Marathon Capital. And right now it looks like we are forming some type of a potential symmetrical triangle, very, very on a small scale, and kind of looks like a bull flag after this rally higher. So, you know, wouldn't be surprised if Bitcoin rallies back up to new all-time highs. For Mara to also break out over 58,000, actually $58 for Mara. Let's take a look at Pinterest. So Pinterest has just been selling off. Unfortunately, this stock has just been consistently making lower highs and lower lows. And of course, after the rally that we saw, you know, that was kind of like the rumor behind PayPal's acquisition. Since then, we've got a huge gap down and then just continuing to sell off as well. So Pinterest is kind of like on the back burner right now. We just need to let the stock find support. We did trim a little bit of our position when it was highs of $65, $68 last week. But rest of the position, I'm just continuing to kind of hold on. And it needs to find some support. The selling pressure needs to get exhausted. We need to kind of absorb all that selling pressure right now. And right now it just needs to find that support. That's all it can do. When there's anytime there's a strong selling pressure, stock continues to sell off. We just need to wait for it to stabilize a little bit, right? The RSI just a drastic move back down with a huge gap down. The MACD's also been selling off. So first things first, Pinterest just needs to have a nice green day, find a support, and then we can look at some of those moving averages and where that next resistance level is going to be for the company. So let's take a look at Voyager Digital. A lot of people are talking about that one. It's going to be this one, VY, GVF. So It had a little bit of a descending triangle in the past. So this right here, lower highs and kind of like a support level here. Then we broke down, consolidated sideways, and we were selling off even further. The volume is decent, 1.4 million. That's the average day volume, and a nice breakout over 18% today. So $16.80 is where we are. Next resistance is going to be sitting roughly at 18 bucks. So $18.18. That right there is going to be the level to watch for the company next. And let's see. So we were validating that support in the past, but that's also acted as a resistance at $18. And support level, I'm going to actually stay put at close to 887. It's got a pretty wide range. There could also be support at roughly at the 1329, 1330 levels. But a strong move for Voyager Digital. Definitely been pushing higher over the last couple days. So it's up, good 90% almost in the last couple days. So Pinterest, we just went over. Let's take a look at TC and NF. So TrueLeaf. And TrueLeaf got a little bit of a bear flag forming right now. So next level I'm watching very carefully is going to be $23.75. So this right here is a level that's on my watch list for a potential add to this position. All right, so the yields are slightly in the green, 1.59, almost at 1.6 levels here. Starbucks down. Wow, Starbucks really selling off, down about 7.3%. We got Amazon, Apple still down over 3.7% each. So almost identical, right? Apple, Amazon, they're both down about 3.8% each. We got Neo pulling back a little bit under 40 bucks. Square's down, Upwork, we got Shopify, Twitter, Pinterest, slightly down. ARKG pulling back. Fiverr. Qualcomm had a decent rally here the last couple of days. Yesterday was up over 1.9, almost 2%, and right now that 50 exponential moving average, the 50 EMA right at 134, is going to be that level to watch very closely. So Microvision, yes. So I did look at this stock. It was down 19% or something, right? So almost 19% here, and getting that breakdown below 10 bucks. So next support, unfortunately, just based on the technicals here, is going to be sitting roughly at that 491 level. But I do expect like buyers to step in, way before that. So let's take a look at earnings and what they actually announced. So, all right. So Microvision Q3 net loss widens despite revenue increase. So Microvision late Thursday reported Q3 net loss of 6 cents per share compared with 2 cents same time last year, while revenue rose to $718,000 from $639,000. Single analyst polled Capital IQ was expecting a 9 cent per share loss. So that was actually better than the estimate, however, widened year over year, with the two analysts projecting $830,000 in revenue during the 3 months ending in September 30th. So we got a revenue miss, still a growth year over year, and we got an EPS beat, but still widening year over year. So that's kind of like a very, very mixed, confusing report. But nonetheless, it's down about 18.5, almost 19%. Resistance next is going to be sitting roughly at 10 bucks, 9.85, around $10 levels for the company. All right, let's take a look at Alibaba. So Alibaba is still struggling at 180. That is going to be that resistance right here. So we got rejected at that level very nicely, and right now we're coming back down. They do report next week, right? So November 4th is when they report the earnings, and that's going to be very interesting. Future guidance and everything that the company reports is going to be very, very important for where the company goes in the future and where the stock price goes moving forward, because it's been a lot under pressure because of the regulations in China and whatnot. So 180 still resistance, support all the way down to 143, $130 per share for the company. So Dave, yeah, so Upwork was down after hours and even yesterday on earnings, even though the earnings were actually decent, right? So last time we checked, we talked about this. So Q3 earnings were flat, but sales jumped, sets out Q4 guidance, raises full year revenue guidance. So yeah, so revenue, EPS, everything, the earnings were great, but the stock was down. So sales jumped to 128 million from 96 million. We talked about this 35% growth year over year. EPS was at 4 cents per share, unchanged from same time last year, getting an EPS beat. Analysts expected 2 cents per share. So So I do expect very similar numbers from Fiverr as well. I do expect a revenue beat, EPS beat, raising some strong long-term future guidance as well. So all that is good for the company itself, the business, the underlying business, but stock price is completely different, right? Oftentimes, we have to kind of remind ourselves that stock prices are not the actual business. They're not the company, not the underlying business itself. And if you're seeing growth, if the underlying business is growing, if it's doing well, if we're getting margin expansion, if they're raising their guidance, the management is doing everything that they can during these difficult times with supply chain issues to still grow revenues like we saw with Apple, and stock price is not reflecting that, we don't care about the stock price. All we care about is the business, the underlying business, the fundamentals. And stock price is just one number that gets affected by it. But that also represents opportunity in the short term, because I've talked about this time and time again, and it's even in the book, that little book that beats the market that I encouraged all of our Discord members to also read. It's a free PDF that can be found online. And in that book, they also mentioned that hedge fund managers, professional money managers, they have to, there's a competition going on Wall Street every year, right? Who beats the market, who generates the most returns, gets the most client, gets the biggest bonuses, and gets the most brand name and reputation and whatnot. So they need to kind of chase after the best companies for that year, for that quarter, not for the long term. And that's why we come in as a retail audience, we kind of take advantage of those opportunities when there's an overreaction for a specific stock, right? When it sells off, we can buy it at a discounted price at a cheaper level. All right, so yes, Vextravio, I've done all the analysis on TrueLeaf. I'm aware of that issue, and they've actually put out a note on their website as well saying that the JT, who's involved with the investigations, is not involved with the company whatsoever, and it's a completely separate issue, and it's already been addressed for. So yes, I'm fully aware of that, and I personally don't think that that's going to be a big issue for the company, because they just completed an acquisition for Harvest, and just the management and the fundamentals are phenomenal. That's by far the best fundamentals I've ever seen for a cannabis company that's based in the US, including Canadian companies. It's one of the best financial statements I've ever seen for any cannabis company. That's kind of like my cannabis play, because I do need exposure in that sector once, if or when cannabis is federally legalized in the US. We're gonna see a big boom in a lot of companies, and I just want to make sure that I'm in it. Let's take a look at Mercado Libre. So MELI. So Mercado Libre, this right here was kind of like that inverse head and shoulders pattern. So left shoulder, head, right shoulder. We got that inverse breakout. Got rejected at almost at $2,000, 1960, 1970 levels, and right now support level is going to stay put at close to 1480 levels. So this right here is going to be that level to watch for the company right now. I think it does trade at a rich valuation. I can't remember. 13 times sales. We're trading at 140 times cash flow, 163 times EBITDA. So yeah, definitely a little bit on the rich side of valuations, but support level is going to stay put at close to 1475. We're just consolidating sideways for the most part for Mercado Libre right now. So S&P feels like S&P 500 just filled this entire gap from today. Let's take a look at QuantumScape. Enphase we already went over. I think it's hitting an all-time high, so not really more for us to go over. 234. It's up on 4% today. Wow. May need to rebalance and kind of trim some profits here. Over 33% year to date, so strong momentum here. 234. We're practically, this right here were all-time highs back in January. So the entire year the stock actually didn't do anything. It was down 35%. Then finally, I mean, this is interesting, right? Because January 1st rolls around and the stock is at $174 a share, roughly around those levels, and for almost 9-10 months we didn't do anything. It was just sideways trading, right? It really goes to show that in a very short period of time stocks can completely change their year-to-date gains and just completely take off, with now Enphase outperforming so many stocks in the market just from 3 days of trading, even though for the last 9 months every single day it didn't really do anything. So Take-Two Interactive up over 77 basis points. So just consolidating for the most part. It's just been consolidating. 188 is going to be that next resistance, and my target 175 is going to be that next support level to watch. It's had a really nice rally back up. And that was another one of those things, right? When they were consistently Take-Two Interactive, I still remember, delays for their games because they need to be quote unquote polished. Wall Street didn't like that. What do? They sell the stock off. Why? Because they want to look for the stocks that are going to perform well in the quarter or in the year. Take-Two Interactive is going to delay their release next year, dump it, right? That's what happens. And still, it doesn't mean that the company is not great. It's still a great company, great fundamentals, great balance sheet, great management, great titles, and still selling off. This right here was an entire sell-off, down about 11.5%, 12% for absolutely no reason. So 188 is going to be that next resistance level to watch for the company. All right, let's take a look at Walgreens. Just consolidating sideways here. Not really doing much, which is good. I want to acquire more and more shares of the company. I think I'm up to like 325 shares or something, 350 shares, roughly around those levels. I want to get up to at least 1,000 shares before this thing starts to take off. But 4%, my yield to cost is going to be a little bit higher than 4%, but just under $47 right now. This right here is going to be that support level to keep in mind for the company at $46.27. Resistance stays put at $52. Just been getting rejected at that level time and time again. So, all right, MTTR, is that Matterport? Or is that, yeah, so Matterport up over 7.4%, getting validated at that 50 exponential moving average. So resistance next is going to be $25 per share. Actually, there's going to be resistance prior to that. This right here is going to be level to watch at $20, $20.62 right there. So that's going to be the near-term resistance, all the way as high as $24 to $25. Then there's going to be a bit of a range for the stock. But this right here, just a lot of consolidation sideways for Matterport right now. So Twilio, we've covered this earlier, but I think on a weekly time frame, you'll notice the RSI is coming down, the MACD is coming down. So from potential swing trade perspective, 273, anything closer to 275, 273 is going to be a possible low risk, high reward swing trading opportunity for Twilio. So yes, I do think with the RSI oversold, with the MACD coming down pretty aggressively, there's going to be strong support at 275, 273 levels for a potential swing trading opportunity, and of course, filling this entire gap back up to $340 a share. That's going to represent a decent upside of close to 20-25% for the company. All right, so let's take a look at Plug Power. So Plug has been on a nice rally here, right? I think they partnered with Airbus. I think that was the catalyst beyond this move back higher on some decarbonization efforts. But we got a nice breakout here, a jump of 12.7%. We came back down, kind of validated that support before breaking out even further, $34.60, $35 per share. So next resistance, let's take a quick look. And the next target for Plug Power is going to actually be sitting roughly at these levels, at close to $39.70. Actually, call it $40 right there for the company moving forward as a resistance. We got rejected here briefly before selling off even further. So nice recovery for Plug Power, right? Just back in May, it was trading as low as $18 a share, and since then we've actually rallied close to over 109, 110%. So strong move to the upside. So, all right, let's take a look at, I've actually never done this, but let's take a look at Shiba Inu, just for the fun of it. And I was actually curious. So this right here is where we are, right? 0.0007. And this has been the entire move. So it's gone up over 819%, 842%. So, by the way, congratulations to everyone who's traded Shiba Inu and, of course, is still in it. Congratulations. It's been very, very incredible. But what I really think is that 800%, I thought this was like up thousands of percent. Or am I missing something? Because I really thought that this whole hype around Shiba Inu, I thought it was up like 2, 5, 6, 10,000% or something. Because I kept seeing like this outrageous math like on a lot of different posts that had you invested like $1,000 like a couple of years ago, it would have been up like millions or something. Like And when you do the actual math, and when I looked at the chart, it's up, 882%, which is a great gain, but I think I was expecting a lot more than that. I was expecting like a couple thousand percentage gains for Shiba Inu. Of course, it can go much higher than here. Of course, it can kind of move decimal places. The more it moves, the more the gains are going to be in the future as well. But strong momentum, definitely a lot of sentiment, of course, a lot of momentum behind it, and the whole movement as well. All right, let's take a look at STEM. All right, so most reporting from inception could be because TradingView only shows like whatever that consolidation period we saw. Tesla hot 1100? No way. Wow, look at Tesla at 1100 here. New all-time highs at 1100, right on the dot, and we got the market cap almost touching $1.1 trillion. Wow. That is incredible. That is just phenomenal. Just to think about the fact that on a pre-split basis, this stock is over $5,500. Because 5-to-1 split times 5, $5,500 is where we are right now for Tesla. Incredible. Microsoft at 326, they're not really doing much here. Tesla just keeps going. All right, guys, so I'm probably going to end it right there. I think that's a good spot for us to end it because of how well Tesla's been doing. So thank you so much for being here. I really do appreciate you guys' support. I think this week has been kind of a bit of a roller coaster because of all the earnings. We've seen a couple of green days. Today is a little bit of a red day with Apple, Amazon kind of dragging us down. But overall, we've seen a lot of companies push higher, do really well, and hit new all-time highs. I mean, I can't even, we got Etsy, we got AMD, we got Nvidia, we got Tesla, we got Enphase Energy, we got so many stocks hitting new all-time highs this week that it was absolutely incredible to watch. So thank you so much for being here. Congratulations on all the profits and gains. Make sure that you check out the Patreon link down in the description below in the first week of November. But for Halloween, we're also giving up to a 30% discount for the fundamental analysis course, and the coupon code is going to be SPIRIT. So hope you guys have a very nice weekend. Happy Halloween to all of you guys. Hope you enjoy. I can't handle scary stuff. I hate watching scary movies, but happy Halloween to everyone, and hope you guys have a great weekend. And I'll jump over to our Discord, kind of answer any questions and take on any messages over there. So thank you so much for watching. As always, happy investing. I'll see you guys